There are more than 10 million people that have to do a self-assessment tax return in the UK each year, and a lot of people find it pretty overwhelming just knowing what they need to do and where they should start, and they often end up procrastinating and delaying the inevitable pain, I suppose, for want of a better expression. So we thought that it might be useful to give you a step-by-step guide for what you need to do to submit your tax return on time this year. If this is the first time you've had to complete a self-assessment tax return, there are 5 steps to this process for you. However, if you have already completed one yourself, you can skip forward to step number 3. Step 1, very, very simple, yet incredibly important. Find your UTR. So your UTR is your Unique Taxpayer's Reference Code, and you'll get this on any letter from HMRC to you since you've registered for self-assessment. Now, if you haven't registered, you'll need to do that before you get a UTR and are able to complete and submit your tax return. So for step 2, you'll need to create your digital tax account. And if this is the first time you're completing and submitting your tax return online, you'll need to visit the gov.uk website where you can get your individual user ID. Once you have that user ID, simply follow the instructions online to register as a new user. You'll be sent an activation code within about 10 days, and then you'll use that code to log back in and follow the simple instructions. Just make sure that you do this well in advance of the deadline, because it can take some time for that code to be sent to you. So now it's time to get everything together and start completing your return. So step 3, make a list. Make a list of your income and your expenses and break that down into different sources of income and expenditure. So for example, you might have income from employment, you might also have income from property, you may have some income in terms of bank interest or from your sole trader business. So make a list of all of that income, and we'll talk in step 4 about the detail that you need in order to complete your return. So with regards to expenses, also make a list of your allowable expenses, such as professional subscriptions, property related expenses, expenses in relation to your sole trader income. Other things to consider are if you or your spouse or partner has income of more than £50,000 per annum and you are in receipt of child benefit, then you'll need to start paying that back, and again that will all go through your personal tax return. On that note, any jointly held assets or income which is derived jointly or expenses spent jointly should be divided between both you and your spouse or partner. Don't forget also any allowances such as foster carer allowance or other carers allowances are also treated as taxable income, as would be any capital gain that you may have received from a sale of asset throughout the year. That also needs to be captured on your tax return. So step 4, now it's time to compile all of that information together. So let's start with income from your employment. So with regards to salary received from any pay-as-you-earn scheme, you need to remember to include bonuses and any other benefits with this. So you'll require a copy of your P60 for the last financial year, as well as a P11D if you've had one. And you should ask your employer for that information. If you've had more than one employment throughout the year, clearly you'll need a P45 from any employment which you have left during that period. You should also have a statement of pension contributions for any pension payments that you've made during the year. And this is particularly relevant if you do happen to be a higher rate taxpayer, to make sure that you claim back any of your higher rate tax relief on that contribution. In order to determine the profit from any property letting which you should be putting on your tax return, you should have your rental accounts, and do remember that residential property lets, commercial property lets and holiday letting are all treated separately or differently, and therefore should be looked at separately. Do also remember to factor in the fact that the rules around mortgage interest rate relief for personally held or privately held residential properties, let properties, are changing. Your profit and loss from any self-employment can clearly be found on your accounts, and do remember that if you have losses to carry forward or carry across different self-employments, then that should be factored in at this stage. You will of course then need any bank or building society account statements, any mortgage or interest statements, any share or dividend statements from both investments and dividends that you may have as a director or shareholder in a limited company, mileage records, charity receipts. Do remember also that there are certain other allowable expenses for which you may not have nor require any supporting documentation, such as flat rate use of home allowance, daily subsistence allowances, and so on. So you're almost there. You've found your UTR, you've created your digital tax account, you have written a list of your income and expenditure from various sources, you've gathered together all of the supporting documentation, and we are ready to go. It's time to log back on to the HMRC website and complete your return. So that's it. Step 5 is to complete and submit your tax return online. Simply log on to HMRC's website using the identification code from step 1 above, and then select self-assessment and complete each page of the document with the information that you've compiled in steps 2 to 4 above. Save it and submit. It's as simple as that. So a few quick things to remember. The list that we've gone through is by no means exhaustive, so if you do have any questions, or if you think that your personal situation is somewhat complicated, do seek professional advice either from us or from somebody else. Do remember the deadlines. There is no excuse for late filing, none. HMRC reckon that you've had long enough to file your return that they do not take kindly to any excuses in our experience. The deadline is the 31st of January each year. That's also the deadline for payment of any liability. Returns submitted late will face fines, £100 for the first time it's late, and then if it's more than 3 months late, there's an additional £10 per day. For any liability paid late, interest is also charged daily on that liability. And if HMRC think that you have been fraudulently trying to avoid tax, they can fine you as much as 35 to 50% of the total liability, in addition to penalties and interest charges. If you would prefer your tax to be collected through your tax code through the year, if you have enough of a salary in pay-as-you-earn coming through to allow that, then you can request this, but this must be done at the time of submission, and your tax return must also be filed before the 31st of December rather than the 31st of January. So just to recap, your 5 steps to complete your self-assessment tax return on time are: 1. Find your UTR. 2. Register your digital tax account. 3. Compile your list of income and expenditure, what needs to go on your tax return. 4. Pull together all of the supporting documentation for these lists. And 5. Register again online, complete. Remember to save and submit. And if all of that sounds a little bit overwhelming, just give us a call, and if you can get the information to us in the next couple of days, we guarantee to do it in time and well in advance of the January deadline, so you can sit back, relax, and have a really Merry Christmas.